Welcome to Core Finance TV. I'm Gaurav Sharma. I'm an independent oil market analyst and a columnist for Forbes. Today I'm here to discuss the sort of volatility that we've been seeing in the crude markets over the last 3 to 4 weeks, leading some to tell you that we might touch $100. There was even an article on Market Watch which suggested that if the Saudi tensions with the rest of the world relating to the Khashoggi affair escalate, we could even touch 400. Now, my hypothesis is it's all extremely balmy, and what we are seeing right now, the uptick that we are seeing in the market right now, as you see on the chart in front of us, has been largely driven by sentiment and not fundamentals. Now, in this market, sentiment is everything. If you look at it from a pure play perspective, we are being told that the Iranian sanctions are going to bite significantly. I suspect we will take about 1.4 million barrels per day of Iranian production offline come, say, within the next 12 months. So yes, that is there, but there will be an uptick from elsewhere, especially the United States. Now, if you look at these three benchmarks, you look at where the OPEC basket is, you look at where Brent crude is, and if you look at where the West Texas is, we've sort of been oscillating in the 60 to 80 range, perhaps practically all year round. And my prediction, despite whatever you might have heard in public discourse, still remains for an average Brent price of about $75 per barrel. And I believe that is the case because I still think there is plenty of oil in the market. And that's primarily due to the United States, which has, if you could get the second chart up, has become the world's largest oil producer as of September the 12th, 2018. Now, if you look at it, American production continues to rise. Now, we're told about the Chinese-US standoff. We're told about Iranian barrels being sucked out of the market. There are just too many geopolitical variables right now. So how do you analyze this situation? My guess, let's say Iranian barrels come down and American barrels go up. And what you'll see is a lot of American light crude cargo heading to the Far East. Now, hypothetically, the Chinese defy the Americans and continue to take oil from the Iranians. You will find that the US oil barrels will step into the breach in a number of areas. Now, not all crudes are created equal. There is not such a thing as one barrel can do a like-for-like replacement. But not only will you see the US producing more, you've got severe bottlenecks in Canada where there is a glut of oil and the Canadian benchmark is trading at almost a $50 discount in certain markets. Then you've got other non-OPEC plays and plus the old OPEC plays. Now, OPEC has promised that it will put a nominal 1 million barrels per day extra in the market. And basically what it's saying is that it will up production, but not by very much, because OPEC in itself does not see any room to raise the production because they feel that their clients are satisfied. To quote the Saudi oil minister, why should Saudi Arabia raise production when all its clients' needs are being met? Long and short of it, there's still plenty of oil out there in the market. What we see from a spread betting perspective is daily fluctuation. So my suggestion, play the news, go week in, week out with a 500-point spread either side, and you will get bearish days, you will get bullish days, but I suspect that the oil price is stuck here for a very long time. What are the key things on the horizon? We do not know how President Trump would react to the Khashoggi affair. We do not yet know what kind of fluctuation we will see when the data comes out between Nigeria and Libya. And of course, we do not yet know how the Iranian sanctions might come out bite. And there is some talk of the Americans giving the Japanese, the Indians a reasonable amount of leeway when it comes to importing from Iran. So the variables are aplenty and the factors are still in sync. So take the variables, take the market factors, try and reconcile them, see the news, watch out for Trump tweets, and of which there have been several directly against OPEC, which has been the surprise here. And of course, the other key thing is the OPEC meeting at the start of December. Factor all of that in, take your spreads, look at where the oil price is going, play it daily. But on a long-term basis, I still suspect that we'll end the year at $75. And a lot of this chatter that you see about $100 being achieved over the first quarter of 2019, I don't exactly buy that. But even if the hedge funds who are sort of piling into the rally have their self-fulfilling prophecy being realized and we touch 100, I suspect the market is in real danger of overshooting and will come straight back down. So the 60 to 80 range is where we'll oscillate at. Thank you for your time.